Welcome to the Stock Hacker Show. My name is Joel. Earn will be with us next week. This week, we're going to dive into Tesla and how they make money, how the business is doing. They just released financials last week, so we'll look into those that earnings report a little bit. Also, before we dive into Tesla, if you are a real estate investor and you're just starting to get into stocks, maybe again because you got burned before, or maybe you're just starting to really dive into them for the first time, maybe your friends, your other investor friends have been finding cash flow in the market and you're starting to say, okay, it's time to look into this, but you're not sure where to start. Well, we just released a free report. It's called How Real Estate Investors Find Cash Flow in the Stock Market. It's Cherry's story and stories from 4 other real estate investors and entrepreneurs who are still investing in real estate, but are augmenting their cash flow in real estate with the stock market. If you're interested in that report, link is in the description below. And on to Tesla. So Tesla, EV automaker. Obviously, you know, it's kind of ironic. Today is Earth Day, recording this on Earth Day, but was not planned that way. You'd think that they make their money from selling cars. That wasn't true until 2021. It wasn't true until this time last year. They largely made their money from regulatory credits. Brief explanation of what regulatory credits are. Many state governments have a rule that you have to have so many regulatory credits for creating, as an automaker specifically, for creating zero emission vehicles. If you don't meet this standard, this number of credits, you have to buy them from someone else. You have to buy those credits from someone else. How do you get those credits? Well, you produce a certain number of zero emission vehicles, you get a certain number of credits. Companies like Ford and GM definitely weren't meeting that credit criteria. Tesla, on the other hand, all they make are zero emission vehicles. So they got loads of these regulatory credits for free. It's just like this, it's like a point. You make so many vehicles, zero emission vehicles, you get so many credits. So Ford, GM, and other automakers have to come to Tesla and buy those credits off of them. That's a 100% profit for Tesla. So for a long time, that's how they stayed afloat. That's how they made their money. Now though, now it's a different story. So let's dive into their earnings report a little bit. I'm going to share my screen and make sure I share the right screen. Okay, so this is, just to show you here, Q1 2022 update for Tesla. And let's just go right to their numbers. So automotive revenues totaled 16.8 billion. That's a year-over-year increase of 87% now, of which are regulatory credits, 679 million, which is interesting that this is actually a 31% increase over last year too. But so you can see the majority of their revenue does not come from these regulatory credits anymore. Interesting. Look at this profit margin, gross profit margin, but still 32.9%. Fantastic. And total revenue is 18 billion. Operating expenses 1.8 billion. Operating margin 19.2%. Right. So, and here's another point. Here's something else I wanted to point out. Cash and cash equivalents as of the end of Q1 2022, 17 billion, right? So they're sitting on a significant amount of cash or cash equivalents, stuff that they can liquidate pretty quickly should they need to. Now their debt, do we have a picture of their debt here? Capital expenditures, net cash flow, or net cash provided. No, it doesn't look like it. That's all right. Does it have it down here? No, this is the production guide. In a minute, we'll skip to some of their other financials and take a look at debt and stuff like that. And we'll look at some ratios. The Q1. Oops, we want total deliveries. Here we are. Q1 2022 total deliveries 310,000 vehicles delivered. That's a 68% increase year over year. Okay, so that's fantastic growth. I think, let's see here, 2021, 900,000, I believe, if I remember doing this math correctly. They delivered over 900,000 vehicles. So, I mean, they are a big player for sure. And you like to see that number going up pretty steadily by 40,000. I saw it 60, almost 70,000 there. And then only by 2,000 there. Still, increase is good. So let's take a look at some of the other financials, some of the ratios and stuff like that. So I'm going to pull up. Okay, actually, let's take a moment and just talk about what we're seeing there. So is Tesla worth buying? Their stock price right now is $1,000. It's about 10.09 as I speak on $1,009. That seems like it can be a lot. And that's after a price split, what, a year and a half ago? And you're wondering, and it leaves you wondering, like, is it worth that? So you look at, we see that they're making $17 billion, $16 billion in revenue. Price to earnings is 206. That's massive. Like the price to like what they're bringing in, that's heavy. You know, they're a $1 trillion market cap company. Is that worth it? Okay, well, we see that the production is increasing, although it probably, you could say it actually more like plateaued last quarter. They're still delivering plenty of vehicles, but the growth just wasn't there as much last quarter. But the growth in revenue, the cash, they have cash ready. They are covering their debts, obviously. So from a fundamental standpoint, it seems like it would be tough to jostle and move Tesla out of this moat that they've created for themselves, right? And we could dive more into like the technology and stuff. Haven't fully researched like their technologies, and because that's really where the moat is created. If people can't catch up to the product they're delivering, they're never going to be able to catch up to their financials. That's not always true, but you know, generally speaking, that's how you look at it. If you can't match their product and service, then you're not going to catch up to them in market share. So even though Tesla has this high price to earnings ratio, they still seem like fundamentally they could be on solid footing for now. And this is an opinion of an amateur stock analyzer. Like, it's not, I am not a pro. Don't take my advice on this. Go do the research yourself and see if this is worth it for you. Take a look and see if there are ratios and numbers there that say to you that Tesla is going to be worth this much and more in the next few years. Okay, so enough babbling. Let's actually look at these charts, fundamentals. Okay, so Tesla's financials. This is TradingView. This has not updated since for the Q2 or Q1 earnings yet. So we don't have completely up-to-date stuff, but the one thing I really want to take a look at is their balance sheet and their liabilities. So short-term debt. Q4 2021, I got it on quarterly, that's fine. it's almost 2 billion, 1.96 billion. Long-term debt, 7 billion. Okay. Now, as of Q4 2021, how much cash were they sitting on? 18 billion, yeah, okay. 17 of which is cash and cash equivalents. All right, so about the same. They're sitting pretty, right? They're sitting pretty. In terms of, they have the ability to pay out their debts if they need to. That's important. So interest rates go up, doesn't impact them as much. If production or demand declines, they have a cushion. Their debt isn't looming over them. They do not need their debt to fund their operations. So that's a big piece. Book value per share. Here's the big one. Okay, 29.22. I wonder if that's different now. So book value per share is assets minus liabilities, and I don't think we had that in the earnings report. Assets minus liabilities, and whatever you get, you should have equity left. Generally speaking, on a high level, that's your shareholder equity. That's what's entitled to the shareholders. So how many shareholders are there? Or sorry, no, how many outstanding shares are there? Divide that equity per share. 29.2 is your book value. $29.2 is your book value per share. That's nice. You want to see that higher. You want to see a lot of book value per share, right? I believe they have a price to book ratio here too. Debt to equity. Yeah, look at that. Nice and low, 0.28. We like that. And I'm looking for a, yes, price to book. Okay, so even though we have, 29.22, 0.22 book value per share, the price to book ratio is still $34.52. So per dollar of book value, you're spending $34.52, right? Is that high? I don't know. That I can't say whether, I mean, it's higher than some other companies I've looked at. You have to take that number and decide for yourself if that is something that is worth investing in for you. Price to sales is 21. That's actually fairly not like, again, I'm comparing to other companies that I've looked at, okay? What I'm used to seeing. It's not what you're used to seeing. It's not what you're comfortable with. It's just me. And I cannot make these decisions for you, but other companies I've seen. So this means that even though the price is high, there's still potential value in that, right? Price to earnings. So this is where like it can get wild, right? Now here's something that you wanna see, okay? Price to earnings is like one of the pillar ratios that value investors go for. So when you're looking at stable companies, you want to see a low price to earnings ratio. You don't want to be paying a lot for earnings, right? How much are you paying for each dollar of earnings? You're paying right now $206 for every dollar of earnings that you earn, for every dollar of profit. That can seem like a lot, but look at the trend. So 2020, it was lower. It was going up and up and up. And now it's starting to come back down again. I'd like to see that. It's a good trend. Hopefully they can continue that. I think now that they're profitable, and you notice since they started becoming profitable with the cars, I'm not going to make that direct correlation, but timing lines up. Since they started becoming profitable with the cars, they have also concurrently dropped their price to book ratio, or sorry, price to earnings ratio. Okay. What does all of this mean? Tesla is not a new company, but they're still growing. and their technology is not, it's not the tried and true technology of, say, GM or Ford or other automobile companies who have been in the market forever, right? There's still some proving to do, especially with the self-driving technologies, the longevity of their cars, although that's been tested now. Obviously, they've been in business for a while, but they're going to be releasing the Cybertruck and the Roadster, and it's, what will, so they are expanding their offerings, which more products, more sales, usually. Tesla is a bet on the future. I can say that with fair confidence. I mean, anybody really says that. It's investing in Tesla is saying, I'm going to bet this amount of money that this industry, the EV industry, electric vehicle industry, is going to be around long enough for me to reap benefits from this investment. I think that's a safe bet. I think the fact that governments are incentivizing zero emissions, is a big deal. They're spending money on this. That says a lot about what governments want. So, and it's what people want. The demand is there. Increased deliveries and over the last few years. So all of this information coming together, you get to decide whether you think Tesla is worth making the future bet on. And then if it is that something you want to do in a TFSA? Is it something you just want to do in a personal investing account, RRSP maybe? Who knows? But that's up to you. Okay. I hope this has helped. Again, if you're a real estate investor and you're just starting to dive into stock market stuff, don't forget to check out the link below for our free report, How Real Estate Investors Find Cash Flow in the Stock Market. And then we'll see you next week. Thanks.